I'm going to be going over everything you need to know about buying a property with an FHA 203K rehab loan, which can be a great way to start building wealth. So we're going to cover the process, requirements, everything. Just give me about 10 minutes in this video and we will cover it all. Okay, so to get started, what exactly is it? Well, it's basically a loan that will cover the entire purchase price of a property as well as the renovations so that you don't have to come out of pocket, like $20,000, $50,000, $100,000, because most banks are not going to lend on properties that need a lot of work unless you're getting hard money or an investor type of loan, which can be a super high interest rate. So it's nice to have all the renovation costs as well as the entire purchase price wrapped into one loan. And this type of loan is good for somebody that may not have a ton of cash or may want to conserve some cash and doesn't mind doing some work to build, potentially a substantial amount of equity in the home. And what's great about this product is that you can basically purchase almost any type of residential property. So, those foreclosures, fixer-uppers, even up to a 4-unit apartment building. I actually had a purchaser a while ago who bought a 4-unit apartment building, fix it up. I don't even want to think about how much equity they have right now. But all those investment deals that you drive by and you say, oh man, I wish I could fix this up. I wish I had the money to do that. This type of loan could be a great option for you. Now, it does have to be your principal residence for at least a year once you're finished fixing it up. And we'll talk about the requirements in a second here, but let's cover the process. So the very first step in the process is to actually get approved for a 203K loan. That's pretty much the process in any type of loan. You should get approved for the type of loan you're looking for. However, with 203K loans, a lot of lenders don't actually do these and don't really have too much familiarity with them. So you might have to ask around, reach out to me if you need a good one. But that is going to be the first step. And then you're going to have to decide, do you want, there's a streamline and then there's like a standard one. So if you're doing less than $35,000 worth of repairs, that's going to be a more streamlined process. Whereas the standard version is going to require more paperwork. And that's for a property where the renovation cost is going to be over $35,000. After you go through the initial pre-approval process, then you can start looking at deals. Now, these types of properties, they're going to take more like 60 to 90 days to close, and you should just build in some more forgiveness because they just take a little bit longer with all the moving pieces going on. However, especially in this market, there are plenty of good deals, plenty of properties that have been sitting on the market for a long time in distress that need work that the seller would love an offer on, even if it is an FHA 203K, which might take a little bit longer. I would look at any property that's been listed more than 90 days, might have bad photos or some other type of distress type of situation. And this type of loan is going to be hard to win. If there's like multiple offers, a seller's probably going to go with somebody that can close in like 30 days or even faster than that. But this is great for properties that have been sitting for a little while or need a lot of work. Once the offer's been accepted, then you have to get a contractor to go ahead and give you a detailed scope of work so that you can give that to the lender. And a lot of contractors are not too familiar with this process or may not even do FHA 203K because it requires them to kind of front some of the money and front some of the repair work, and it just takes a little bit longer for them to get paid. However, you can do a little bit of research, go on Angie.com, do some online research, ask around, ask different lenders, ask different investors, and you should be able to find a couple contractors that do this type of loan. And some contractors actually even specialize in FHA 203Ks. So, that could be an option as well. Then the appraisal is going to be ordered, and they're going to do the appraisal based on the future value after the property has been renovated. So for example, a lot of distressed properties have like a margin of equity that a savvy, home buyer can take advantage of. For example, they may only be selling for like, let's say $350,000 and it needs about $50,000 or so worth of work. Renovated, that property might sell for $500,000, which would give you about $100K worth of equity. And obviously, every deal is different, every market's different, but there's a lot of potential with fixer-uppers. So the lender is then going to submit the appraisal, the detailed scope of work from the contractor, as well as the personal qualifications of the buyer. They're going to submit all of that to underwriting, and it can take, a few weeks for this process to be turned around. Then the underwriter is going to take a little bit of time to review all the documents, review everything, make sure everything checks out. And if everything looks good, they'll issue the approval. Sometimes they might issue the approval with a few restrictions like, hey, you got to fix that or you got to have them do this. But then you can set up a time for closing. And like I mentioned, with these types of deals, you really want to keep all your contingencies. You want to do like I think 60 days might be the soonest. a lender could close on these types of transactions. You probably want to plan on more like 90 days in that time frame. And then once you close on the property, the contractor is going to have to start work on the house within 30 days after closing, and they're going to have to be completely finished with the project within 6 months. So that should give you enough time, to do all your renovations. Now let's talk a little bit about qualifying for these loans. So like I mentioned, most lenders are not going to be familiar with these. Most lenders don't do these types of loans. So either reach out to myself or ask around and find a lender that has done one or two of these before. This also does have to be your principal residence. So you have 6 months to fully renovate the property, but then you have to move into it and you have to live there as your principal residence for at least a year, or at least it has to be your intention to live there for a year. But then you can rent it out or do different things with it after that year-long period is up. As far as the down payment goes, it's going to vary with each lender, so always confirm with them. But as long as your credit score is pretty decent, like at least over 600, then you'll only have to put down 3.5% down. And if it's below that amount, usually you're going to have to put down at least 10%. And what's cool about these types of loans is that you can actually borrow up to 110% of the property's after repair value, or the purchase price plus repair costs, whichever total is less. That's how much you can be approved for. As far as the interest rates go with these properties, they're still going to be pretty competitive. However, it is going to be a little bit higher than your standard FHA or standard conventional, just because you don't have to put very much down, and you're also financing repair costs and renovation costs. If you were to do this with a traditional hard money loan, you're looking at like 2 or 3 points and like 15%. So even though the interest rates are a little bit higher, I think it's still a pretty good deal. Let's talk a little bit about the repairs and what types of repairs you can actually do. So all health and safety stuff pretty much has to be done, like broken windows, missing handrails, lead-based paint, mold, obviously, if there's like a leak in the roof. But then you can also use it for pretty much any other type of renovation you were looking to do, like replacing the floors, updating the kitchen, bathrooms, that type of work. There are a few restrictions, like you can't build a swimming pool or a cannabis dispensary, and a few other things that you probably weren't going to do anyways, but there's always that one person that wants to build a pool and probably a cannabis dispensary. And also the way that the renovation repair costs work is like the bank is not just going to give, if you're approved for $50,000 in renovation costs, the bank is not just going to give you like a blank check or a $50,000 check. They're going to approve the different work in stages, basically in draws. So let's say you get approved for $50,000. You're going to have to break it down into let's say 5 different draws. The contractor is basically going to have to do the work, basically front the cost, and then the escrow money, let's say the $10,000 escrow money will be released to the contractor. And there's also going to be like a HUD consultant that's involved and that's going to approve the work, approve the payments, and make sure everything's going on track. And because you have all these people and all these moving pieces, that's sometimes why most contractors just want to get paid up front. They don't want to have to deal with anybody else. They don't want any type of delays. And that's the reason these take a little bit longer. Just there's more moving pieces. And what's cool is that if you, the person that buys the property, if you're a handy type of person, you can actually do about 10% or less of the project. You can't do more than that. You have to have the contractor do that. But, for smaller type stuff, this could be a great option. And because any type of project, like renovation project, can just take a little bit longer and you have all these moving pieces, you have to dummy proof everything. You have to be like crystal clear about what is being done, who is doing it, what you want the finished product to be like. Make sure to keep all invoices, keep all photos, just make sure everything is dummy proof, because you're going to need that information to make the process, a lot smoother. Okay, so let's talk about pros and cons. So the obvious con is that it's going to take a little bit longer. Like I mentioned, closing can be 60 to 90 days. There's going to be more paperwork, more stuff involved. That's obviously a con. Another con is that if you're going up against another offer, even if your offer is higher, it's unlikely that you're going to win the offer unless it's like substantially higher, just because most agents and lenders are not familiar with this and they'd rather go with something that's like a 30-day close, as is, that type of thing. I mean, an FHA 203K usually is as is because you're doing so much work, but it's hard to win this type of deal when there's multiple offers. Another con is that it's going to be higher interest rates than your traditional loan. And most people do like an FHA 203K, and then after a few years, after they've built up some more equity, they refinance into maybe like a conventional loan or some other type of loan. It's also going to be tougher, like I mentioned, to find contractors and lenders that do these types of deals, but they are out there. Okay, so let's talk about the pros now. So one of the obvious pros is that you can buy that fixer-upper that you've been looking at. You don't have to come out of pocket for like $50,000 or $100,000 in repairs because it's all wrapped into one loan. So there's so many people that are not even aware that this type of product exists. They just see that investment deal and they're like, well, I don't have the money to fix it up. Well, in this case, you do. Another pro is that you can do basically any type of renovation or repair that you want. Like I mentioned, you can't build a swimming pool or cannabis dispensary, but you can renovate the kitchen, you can finish the basement. You can basically build your dream house with these renovations. Or maybe you're trying to set yourself up from an investment perspective. I had a client that bought a 4-unit that needed a lot of work. They use this type of loan. And like I mentioned, I can't even imagine the amount of equity they have in that property right now. This was a few years ago, but they got an absolute steal because no one else wanted to really touch this deal. The bottom line with these types of deals is that if you're patient enough to get through the paperwork and you don't mind doing a little bit of renovations, you can get an absolute steal. So if you're interested in doing this type of loan, reach out to me. I can put you in touch with people nationwide that can help you out from the lending side of things as well as the agent side of things. See you on the next video. Bye.